In this video, we're going to look at Fed Chairman Jerome Powell's speech at Jackson Hole, and we're going to analyze it. Then we're going to see how the crypto market and how the stock market reacted. We're going to go through a few strategies of what to do next. And we're going to talk about longer term prospects, what to do coming up. Panic is definitely gripping the markets and many people will be buying the dip. I would suggest you don't do that just yet. Most importantly, we're going to see what we need to do next. We need a strategy to deal with this. Stay tuned. It's going to be awesome. Hi everyone, I'm Ken from CryptoTradingKS. What we're actually going to do now is look at sector rotation inside the crypto market. A lot of people see the market as red and say there's just no opportunities. It's time to pack it all up and go home. That's just not true. There are always opportunities inside crypto and inside every market. You just need to know how to find them. That's why I developed BORSOG trading. BORSOG is a pretty weird name, isn't it? It's buy on red, sell on green, rule 621. But we don't mindlessly buy the dip. A lot of knowledge is required to BORSOG correctly. And you'll find sometimes just sitting out, not a bad idea, especially at times like this. I'll explain. One thing that we need to be aware of, the amount of fear inside the crypto market is accelerating. And that's because we lost this very key resistance level. In fact, we had so much trouble getting above it, we just didn't get above it. And then Fed Chairman Jerome Powell's speech came out, which I'll go through in a minute, and that absolutely tanked all the markets. And if you're in the stock market or Forex, Bitcoin is the asset class to understand risk on or risk off behavior. If you're in the stock market or Forex and not looking at Bitcoin, you're losing money, because Bitcoin will give you undeniably powerful signals. Let's have a look at Fed Reserve Chairman Jerome Powell. And what did the Fed chairman say? He was very, very specific, but you have to go all the way down in the transcript to actually figure out what he's talking about. And this is very much the case with politicians in general. But the concept, they're worried about inflation expectations. This is the bottom line. They've learned the lessons from the past, and we are taking forceful and rapid steps. Note the word forceful. This is just like a legal document. Every word is handcrafted and thought about and considered and workshopped before this speech is given. This is not Jerome just going up there and doing a wedding speech. It's basically a speech that will reach billions of people. From that perspective, it's really important to look at the kind of words that are being used. We are taking forceful. This means increased percentage. Basis point increases, 75 basis point, 100 basis point, maybe even 150 basis point, and rapid steps. They need to move quickly. We know that the next FOMC meeting is in about 25 days, 26 days, and we can see the percentage probability of a 75 basis point increase is currently 61.5%. It was 64. It's actually come down a little bit. But the truth is, you will see, I believe, statistically, that a 100 basis point increase will actually get on the table. It will get on this chart, perhaps about 2 weeks before the Fed meeting. Now, why do I say that? Because, as Jerome says in his speech, it's all about inflation expectations. When the economy, when businesses and people start to bake inflation into their decision making, it's literally all over. Just the expectation of higher prices means that everybody is charging more. Everybody has to pay more. Everybody has to get more. And I was noting for about the past week, because the 5-year and 10-year break-even inflation rates were actually swinging up, even though the market was coming down, that was a signal that the Fed needed to be very, very aggressive. What Jerome spoke about in his speech was the idea of rational inattention. When inflation is persistently high, households and businesses must pay close attention and incorporate inflation into their economic decisions. The Fed talks a lot about price stability. It says that's their absolute mandate, is to create price stability. And former Fed Chairman Alan Greenspan put it this way: price stability means that consumers and businesses don't even rationalize inflation into their decision making because it's so small and so gradual as to not impact their decisions. Jerome Powell also said if the public expects inflation to remain low and stable over time, absent any major shocks, it likely will. But unfortunately, the same is true of high expectations and volatile inflation in the 1970s. And this is really, really interesting. He's raised some very, very good points. Back in the 1970s, it was viewed that the Fed shouldn't interfere. It was a rational market, and the market system would just figure it all out. And because of that, we had enormous stagflation, but we'll get into that in a moment. So during the 1970s, as inflation climbed, the anticipation of high inflation became entrenched. That means everybody thought about it, and everybody basically expected high inflation to persist. It became entrenched, built in, baked in to the economic decision making of households and businesses. The more inflation rose, the more people came to expect it to remain high, and they built that belief into their wage and pricing decisions. Former Fed Chairman Paul Volcker said inflation feeds in part on itself, so the key is to break the grip of inflationary expectations. It's the expectation that the Fed has to break. So what does that actually mean for all of us? It means a lot, actually. Jerome Powell said restoring price stability will take some time, requiring the use of our tools to forcefully bring demand and supply into better balance. When you see a word forcefully, you know that they're going to do an out-of-control rate increase. And that's what we've been talking about on the channel for quite a while. Statistically, the probability of 100 basis point or even increasing on that is absolutely on the table. And what else does Jerome say? He says reducing inflation is likely to require a sustained period of below trend growth. What does that mean? It means risk off. What about the next one, where he says, moreover, there will very likely be some softening in labor market conditions. This is just a really nice way of saying people are going to lose their jobs. While higher interest rates, slower growth, and a softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. But he says a failure to restore price stability would mean far, far greater pain. So they're going to hit inflation, and they're going to hit it hard. A lot harder than the Main Street will absolutely understand. There's a lot of talk about a Fed pivot. He's actually got something in here which says, no, we're not going to do that. Jerome says, while the lower inflation readings for July are welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. But it's not just that particular paragraph, it's this one. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Cautions strongly and prematurely. This is a very, very powerful statement. What they're saying, they're not going to back off inflation until they've broken the back of it. Coming from a legal background, we're actually taught what's called black letter law, which is to read a legal document without giving our emotions consideration. And when you look at some of these words in here, I know that some journalists will go out there and say everything is fine. They'll take a quote like this: in my view, the current high inflation in the United States is the product of strong demand and constrained supply, and everything is fine. The Fed will loosen monetary policy and everything will just rally again. This is the sole reason why I always go to the source of information. For example, I went to the Board of Governors of the Federal Reserve to get this speech, the transcript. I would suggest that you always go to the source. Don't rely on news headlines. They can cherry pick. Turning to Fidelity Institutional, we can see the US is in late expansion, heading towards recession. What's actually happened now? I think the speeding up of moving into recession is going to occur. Now, what does that mean for investors and traders? From a tax perspective, of course, there's a difference between traders and investors. Investors hodl or hold on for dear life, and traders continuously turn over. They just buy and sell money, basically. But the key is to understand that all investors become traders anytime they buy or sell. If you're an investor and you're seeking to hodl, you may be subjected to extended periods of negative price momentum. So what do we do about this? What is our strategy? Looking through history will give us some sort of indication. We're going to look at Bitcoin, and I want to draw out some specific price action to you. You can see this kind of grayish line. That is the NASDAQ 100. You can see that Bitcoin and the major indices are in alignment, and they've been in alignment for quite some time. Now, what we're going to look at is this. If you're an investor in, for example, Bitcoin, and this could be any stock in the stock market, because as the major indices go, so too do your beloved stocks or beloved alts or beloved cryptos. Absolutely, we get some kind of variation from this particular index, but in the main, it follows. We're going to go back in time to around the end of May, the start of June, and we're going to focus on what actually happened here. Bitcoin's price action was looking pretty good. Hey, look, it's over resistance. It's going. It's rejecting. The buyers are stepping in. It all looks fantastic. But the key to consider is price action. What happened next? When we actually look at these support lines, we started to get a breakage below support. First level and second level, a rejection by the sellers just pushing down price. And you can apply this to anything. If you're in the stock market or in Forex, it's all the same stuff. If you have a violation of support, it means that it's going to the next support lines. And what actually happened here? We can see the NASDAQ 100 coming down. We know because of Rule 225, Bitcoin cannot escape the stock market's gravity. And because of Rule 45, we know no alt can escape Bitcoin's gravity. All the markets are intercorrelated and interconnected. With this thought in mind, we can say, okay, the NASDAQ, the major indices are coming down, and Bitcoin is getting dragged down with it. And what happened? We had a pretty large sell-off. Now, at a time like this, most people would be out of the market. This is where BORSOG comes into its own. Buying on red, selling on green doesn't mean you buy every red and sell every green, although some people literally take it for that. It is not that. It's something that requires a huge degree of knowledge to do effectively and profitably. And there are some times in the market where you shouldn't be BORSOGing. Let's just play this out a little bit more. What actually happened? We can see the price came down, and it came down from this point, 35.7%. And when it went up, and it always goes up because price is always moving in a wave, and this is what a lot of people actually don't take account of. Price is subjected to wave-based movement, and when you understand that price moves in a wave, it's always going up and coming back, you can see that even if price comes down substantially, it can go up substantially. And some alts during this particular green phase of the market went up hundreds and hundreds of percent. But the key point to note here, there wasn't a lot of support underneath this particular area. When price broke through that area, it didn't have any price to catch it, so it just fell down to the next natural support level. And what are we seeing here in Bitcoin? And remember, you can use Bitcoin as a proxy for risk in the main stock market. And that, of course, goes into Forex, because the dollar, for example, if the stock market is tanking, the US dollar will be rising as a flight to safety. So what you can actually see, we've come down, we've lost this particular resistance line around 21,538, and we've come down again. This is the start of a sell-off. This is not the end of it. And why do I say that? because the Fed chairman made it very, very clear. In fact, he couldn't have made it more clear when he did his introduction, and it's good to watch the live video. He basically said, at past Jackson Hole conferences, I've discussed broad topics, note the word broad topics, such as the ever-changing structure of the economy and challenges of conducting monetary policy under high uncertainty. Today, my remarks will be shorter, my focus narrower, and my message more direct. What is he saying? I'm not messing around here, people. That's what he's saying. He says, I'm going to bring down inflation no matter what it takes. And why is he saying that? Because he understands that economics, when people have rational inattention, they focus on becoming entrenched with inflation. They just think that it will always be there if it stays too long. And they understand that they have to avoid that outcome by acting with resolve now. This is the start. This is not the end. A lot of people, when they hear remarks like this, they get very scared and very, very concerned. Actually, it's at times like this that the greatest opportunities in the market actually unlock themselves. If you're not positioned right, it can cause a lot of pain. But if you're positioned correctly and you have patience and you're prepared to just chill and wait for the right opportunities, for the market to align, you'll do incredibly well, far, far better than you can ever do in the best bull run. What do we actually see when we look at the main markets? If we look at the VIX, the fear gauge of the S&P 500, we can see, well, the fear gauge of the stock market, we can see a huge jump. And we were kind of expecting this already, because if the VIX spikes, it generally can retrace, but it will spike more because it's very spiky. It's just the nature of it. With Jerome Powell's speech at Jackson Hole, many people will just say, oh, the economy is strong. Some newspaper I read or some online magazine I read said the economy is strong and everything is fine. And then over time, people actually will do the hard work, look below the headlines and say, oh, it's all about inflation expectations, and the Fed is going to mercilessly attack those. So what happened to the NASDAQ 100? It broke below this key structural level of support at 12,847. The next structural level of support is 12,086. And we can see that bond prices hit their support line at 136.06, did a technical bounce up. Now, what do we anticipate with bond prices and bond yields? The more tightening within the economic system. And tightening just means that the Fed actually increases the base interest rate or the Fed funds rate. And that's kind of like an interbank rate where banks loan out their money to each other overnight. So that actually is the proxy for other interest rates to follow. For example, when the federal funds rate comes down, all the mortgage rates come down, all the lending rates come down. But when it goes up, all those rates go up as well. But we have a slight problem, a bit of a hiccup. When bonds become attractive because stocks become unattractive, they see an increase in their price. So it's not as straightforward as saying, okay, when tightening occurs, the yields just go up or they go down. There's a multi-dimensional facet to everything in financial markets. It's not simple. You can't just buy a whiz-bang indicator and say, all my troubles are solved. The financial markets don't work that way. And what about gold? We saw gold just doing a technical bounce. Now it's come back to support. What happened? The dollar happened. The dollar has maintained its key structural support level at 108.448. We would expect the dollar to come up now to 110.689, as there could be this risk-off behavior, a flight to safety, a safe haven in the US dollar. Of course, there's been a lot of weakening in the euro as well because of incredibly out of control energy prices, which weakens the euro, which actually pushes the DXY up. And what do we see with oil? Oil is by nature inflationary. And when oil goes up, and of course we could use Brent and we could use other forms of oil. This is just a good one to use. What we actually look at is that oil is at its support level right now, just a little bit above it, and we can see junk bonds have started to, the risk off behavior has started to commence. You can say the junk bonds represent risk tolerance. When they go up, the risk is tolerated in the market. When they come down, risk isn't tolerated at all. They are de-risking their positions. Getting back to what we were talking about with Bitcoin, we do have areas of support down here from about 18,888, say, to the current price. But one thing that we know, we might get a lot of negative momentum which could push price below that level. If we get that kind of push below that level, we could see something like this occur. So what you need to be in, have always in your mind, when you're BORSOGing, when you're buying on red, don't necessarily buy the first dip. You can just watch on Twitter or different social outlets. For example, I bought the dip, but it kept on dipping. You want to watch for things like that. That means it's getting close to turning around. There are always opportunities inside every market at any time, but you have to be careful during this time. Don't risk too much of your overall portfolio until things start to settle down. Don't try and buy the absolute bottom or try and sell the absolute top. That's not what professionals do. Professionals conserve their capital as much as possible and seek to lock in profits as well. If you're an investor, a long-term investor, you may consider just liquidating a small percentage of your portfolio, and whatever that price is would be okay, so long as it's tolerable by you. Your decisions must be your own. But the concept is, get some money together for understanding how to trade correctly. When people learn how to trade, the first thing they need to do is emotional management. And you might say, Ken, what has emotional management got to do with trading? It's simple. I buy at the lowest price, I sell at the highest price. That's just fantasy. You'll never do that. And if you do that, it'll just be luck. The concept is that you need to get into the market synchronization pattern of what is happening. Nothing comes all down and nothing goes all up. It's all waves. It comes down and it goes up. And a good thing to keep in mind is how these percentages actually work. For example, if we look at the percentage decrease below this support level, it was 38.05%. Now, what do we actually see? How much did price increase? It increased 43.5%, 38% down, 43% up. Not bad. And this is just in Bitcoin. Bitcoin is the slowest moving crypto. And for us in the crypto industry, we know that some alts are just insane. They can do 100% or 200% in a single day. But they do that under specific market conditions, and that's what we're always looking for. That's why we go through the sector rotation at the start of each and every video. It's there not just to fill time, it's there to give you skill, to keep your eye on the market. And one powerful way to get in synchronization with the market, which is all about BORSOG trading, it's to get you in sync. First of all, you consider, is the market going down? That's a D. Flat? That's an F. Or up? That's a U in this BORSOG code. And what percentage do you think will move against you? If you were to enter, what do you think? 90% against, 5% neutral, 5% for. We always consider the traffic light last. The green is the last thing. We don't consider the green the first thing. We just think, okay, if everything goes basically down the drain, what would be happening if it goes against us? And this prepares us so that we don't have a story, and not having a story will make you so much money. And of course, it will save you so much stress as well. And that's the key thing. BORSOG is a trading and investing market synchronization technique that starts out with very small position sizes, and then when you are synchronized with the market, you can scale up. Don't forget that as Bitcoin comes down, there will be a handful of alts that will absolutely party. And that's what we're looking for with BORSOG. But we don't have to grab them as soon as they go green, because I believe the market just hasn't figured out how extensive this particular speech is by Jerome Powell. They'll probably cherry pick it and look at it and say, oh, it's not so bad, it's not so bad. They'll just do 50 basis point increase and then they'll loosen monetary policy. That is not the case. And if you read it objectively, the actual transcript, it says it. It says it all in there. They're not going to do that. They're going to go very hard. 75 basis point, I don't think so. 100 basis point, I do think so. Please let me know in the comments your BORSOG code and what do you feel about how the markets will react. Don't forget, the markets never know us. So there's absolutely no reason to get upset with the market over anything it does. It's not personal. It doesn't know you. It doesn't know me. It doesn't know anyone. So from that perspective, you just think about it like this. You control the trade, but the market controls the return. If we're going across all the data sets that we can look at, we're going to be much, much better positioned. Masterclass students, I suggest you look through the LV videos and all the charts that I provide there for you, because there's a lot of good information in there that will absolutely assist you. What we do as crypto technical analysts, and that's what the masterclass is all about, we mark up our charts with the CTKS method. This tells us dynamic support and resistance levels. They're really important to understand. Then we look beyond the charts, like what we're doing right now. We look into speeches from the Fed chairman. We look at all sorts of statistics because we need to understand and collect probabilities. We're just really like a good detective, a financial detective. And then we come back inside the crypto market, finding the market's focus, understanding opportunities do reset daily, and they do, enhancing our pattern recognition. But before we buy or sell, we must master our emotional control. And emotional control at a time like this is important. It's absolutely critical. And if you've been following our particular channel for any period of time, you'll know that I've been saying risk off, risk off, risk off, because things are getting structurally uncertain. But now Jerome Powell has laid out the pavement of where prices are going. We can expect some downward momentum, so the shorts will pile into the market because price is coming down. And what do we see with the shorts? They're absolutely pumping into the market now. And what about the longs? They're buying the dip. Oh, longs, don't do that just yet. There's a time to buy the dip, and there's a time just to chill and wait till price actually consolidates to some degree. I would suggest this is the time for the latter. Basically, when the market goes double-digit red right across the board, I'm talking in excess of 10 or 15% down, right across the board, we're getting ready for the shorts to cover their positions en masse. And when we look at liquidations across the past 24 hours, there's been 95.88 million across 98,241 traders. And what we can see over the past 24 hours, about 75% of all liquidations have been long liquidations. What about the past 12 hours? 72% long. What about the past 4 hours? Nearly 90% long. What about the past hour? Nearly 94% long. The longs are getting hit at an increasing rate, and this will drive price down. And it will, of course, pull all the shorts into the market. So do the shorts always make money? Well, not according to the statistics. The shorts are getting liquidated as well. Price is always moving in a wave. And if it always waves up and down, you can be assured that the longs and the shorts are both covering their positions. And when they sell out or buy into their positions, what you actually see is the wave forming. One thing that I see when I look at this figure, it's too low. When I look at the number of liquidations, people got liquidated, it's way too low. What I would expect is to reach billion-dollar liquidations and hundreds of thousands in liquidated value over here. And this is just how the market works. It works like this. And that's why in our community, we just do spot. Because if you go long or you go short under derivatives, it's just a question of time before you get wiped out, especially if you're just learning. But if you're professional, hey, you know the risks and go for it. Why not? We could ask the question, what is next? The next point of concern for us is the support level at 20,000. and this is a good support level. It's been touched a number of times, but remember, the Fed chairman has just come out. He said, I'm going to hit inflation with everything we've got because it can't become entrenched. So that basically means that I would expect this level to be breached and negative price momentum under that. So if you're buying the dip at the moment, I would suggest that's very dangerous. Again, this is not a cause for concern. This is an incredible opportunity. When price actually comes down hard, we can do incredibly well, but you have to be very, very disciplined. If you want to be in the market every second, the market will take your money. If you're prepared to come out of the market, that's what professionals do. At points of structural uncertainty, they absolutely come out of the market. We have this particular one here. Maybe the shorts will recover their positions, causing price to spike back, for example, to this 21,500 before resuming the onslaught. But I would just warn you, this is very much on the cards. I would prefer not to just give you the cherry view of the market. For example, we saw this undercut. We're getting undercuts, and we potentially are moving into an undercut here. Well, statistically likely to. And if you're a long-term investor, you don't have to worry about things like this. You just say, oh, okay, if it comes down, that's a fantastic time to dollar cost average in. But dollar cost average with knowledge. You don't want to be dollar cost averaging on the way down. You want to be dollar cost averaging when it kind of starts to consolidate. That's a better picture. And when it starts to bypass levels of resistance, that's a good thing to do. Don't worry about buying the absolute bottom. If you're trying to buy the bottom, you'll bottom your account out. And I've been in financial markets for more than 3 decades. I've done every share of stupid thing that you can ever do. And from that perspective, there are some times you just want to be out of the market. I believe this is one of those times. It's something that I'm doing myself. And what does this mean? Does it mean I close the door on crypto and I just don't look? Heck no, I love crypto. I'm looking for the next entry. I'm eagerly awaiting the door to just crack open a little bit and I'll be there with bells on. A lot of people will be asking the question, how low could this thing go? What's the potential downside risk? Well, the potential downside risk, if we get into a sort of a GFC subprime mortgage crisis, it could come down a lot. Now, if it does that, we have to be aware that there are incredible opportunities. There are incredible opportunities no matter when it came down. If you look at the C19, the peak, from the trough to the peak, it came up 120%, 107, 100, 96, 51, 120, 77. And these particular lines go out 5 years. So if you just think about from this perspective, price action coming down puts you on the right side of the percentage, but you want to be sensible how you do it. And don't worry about buying the bottom. Buy confirmed turnarounds. Because we're in a negatively biased market, it's very, very different. When we're in a positively biased market, you can buy the dips with a decent amount of confidence. But if you're in a negatively biased market, you must wait for some confirmation signals. Does that mean that we can't make money until maybe 1, 2, 3, 5, 10 months or something like that? Well, not true at all. You can always make money in crypto. Looking at the top 100 gainers, we can see HT up about 4.7%, USDN up 4.3%, and T-Fuel up 3.34%. You'll notice the stable coins are in the greatest gainers area. This means that the market is going through a traumatic sell-off. What about the greatest gainers in the top 200, from 100 to 200? Voyager token, VGX, up 91.53%. Be very, very careful of anything. It's just like in the stock market. If a company with shares in the stock market is saying, okay, we're going to get liquidated and we're filing for bankruptcy and etc., and you see very big movement in its share price, just be really careful. You can lose everything. On the other hand, of course, you can gain, but you have to understand it's high risk. For example, if you log in to your particular exchange or exchanges, you probably got a few of them, and I would recommend that you do that. When we look at Voyager, it says on Binance, warning, please note that VGX is associated with Voyager Digital, a crypto broker that has filed for Chapter 11 bankruptcy protections in New York. Okay, what does it tell you? Please let me know in the comments, would you trade something like VGX? And if so, for how long? And we can see Brains Trust up nearly 40% and Conflux up 3.43%. What if we go to the top 300, between 200 and 300, we can see Metacraft up 14%, Made up 12%, Made up, MV up nearly 8.7%, HXRO nearly 4% up, and Maple nearly 3% up. There are always opportunities in crypto, you just need to know where to find them. And don't forget, this is happening on a day like today when the market is blood red. So don't lose hope and don't lose focus. Just be there, be aware, be ready to pounce. It's really important to apply Rule 774, master yourself to master the market. We master ourselves through positive excellence. If money is the thing, the be-all and end-all of your existence, you will find deep unhappiness and a lack of fulfillment and meaning. And you say, hey, Ken, this is a crypto channel. You're supposed to go to the moon and all in and more. No, we don't do that here. We're very, very practical people. We're all about building kindness, integrity, decency, gratitude, inner and outer peace. Why is that important? Don't we just need a buy and sell level? And aren't we just trying to retire tomorrow? And with no knowledge and just being, gambling? Aren't we doing that like all the other crypto channels? Except, of course, the ones that don't do that. No, we're not about that at all. When it comes to making any kind of financial investment, there's a deep emotional roller coaster attachment that you feel with your money. You don't want to lose your money. You just work so hard to get it in the first place. But the funny thing is that if you actually just focus on the money, you almost guarantee yourself of losing it. If you focus on doing the right things, the right results will come. And that's what we do inside our community. A lot of people actually live from a scarcity mindset, not an abundance mindset. It's really important to do whatever you can to think that the world is for you, the universe is for you. It doesn't matter what happened in your background. That's going to strengthen your unique purpose in this world. And so long as you use that unique purpose for good and use it to help people, you will be successful. We have the CTKS Creed, which primes our mind for profitability in the crypto market, but it will also do this in life and any other market that you're in. It's just a series of positive affirmations that you say to yourself with a lot of meaning because they're very meaningful. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. We're going to be watching each and every day for signs of turnarounds inside the crypto market. And one thing really interesting with poor old ADA, let me just zoom in there. When I look at ADA, I think that this kind of behavior that we saw in May could be coming. Now, why do I say that? Because we had a big sell-off, as we've seen recently, a bit of a run-up, and now a very big sell-off. And there's not much support under here. In fact, there's very, very little. And this is a very different situation or a different picture that the other alts find themselves in. Just bringing that to your attention. The other thing to note is that ADA was particularly interesting. It bottomed first and then did a substantial rally. I'd like to give you an idea of why trading is so incredibly valuable, and learning the skills can just set you up for life when you consider this particular price decrease in ADA from the peak down to the peak up to the peak down. ADA decreased 58.07%, but then it rallied up nearly 80%. came down 21.8%, came up 24%, came down 34.8%, up 25%. You can figure out if you can time around these areas, you're going to do really, really well. And Masterclass students, you know your lines. Those lines are vitally important. And let's compare the scenario if you were just investing from that top to where you are now. It's a decrease in ADA's value of about 53% with no riding of these waves in between. And we know that the market has been heavily negatively biased, but these returns are always there. This is crypto. It's by nature incredibly volatile. And the more volatile it gets, the more downswings and upswings we can get. It's the absolute best time to be in the market, but only very, very few will actually be in the market, because what typically happens is that retail emotions will kick in. People love it when prices go up. There's a big long line waiting to buy at high prices, but when high prices come down to earth, everybody scatters and everybody runs except the smart money. Smart money is there buying, and then retail comes back in, tries to get in, pretty much times the top, and smart money is now accumulating as retail is fleeing. Please don't be retail, be smart money. It can change your entire life. Thank you very much for all of the comments in yesterday's video, just sparkling as always. Dord260 had a question. What does it mean to descale when you go out of sync with the market, selling at a loss, cutting your losses, taking smaller position sizes? The first thing to note, everybody is different in their trading and investing philosophy. Some people are just long-term hodlers. They'll just hold on forever. Other people will trade in and out and not have anything overnight. So people tend to be somewhere in between those two extremes, if you like. Philosophically, you make money in the markets in one of two ways. You make profit when you actually buy and you sell higher, and you can avoid losses when you actually keep your losses small or keep your losses non-existent if you can, and that's often really, really hard. Losses is just a tuition fee of the markets. We all get those. But the key is when you're in a key structural time, for example, like what we just experienced, it's good to just come out and sit on the sidelines, wait for things to become clear, and then pop back in. You're always waiting for the door just to inch open a little bit, and you're just going to go for it. And that's the concept that we do. And what I showed you with ADA just actually shows that very, very well. It's always good to preserve your capital at all costs. For example, many of our community have not been in the market for the past week because they actually understand that whilst prices can come up and down, if there's significant uncertainty, it's probably better just to go to the sidelines, sit there for a while, see what's happening, and then just come back in when the smoke clears. When you're in a market like this, and there could be more negative downward momentum, and we expect that actually at the moment, you can just cut your position sizes. You don't ever want to go all in, and you don't ever want to try to time the bottom or to try to time the tops. It's just not like that. We control the trade, but the market controls the return. We just have to move in sync with the market. There are so many fantastic comments in the comments section. I really urge everybody to read it. And doing your BORSOG codes each and every day will really, really help you to get a feeling on the market. It's just for you, but you will find as a community, when people inside the community become out of sync, it just means the market is at a key turning point. And as a community, we focus on abundance. And Rajat said, abundance is the way of nature. It is, my friend. Beautiful. There is more than enough for everyone. The one with abundance mindset does not need to compete with anybody else. They just only want to improve every day. I always think of the tennis players, John McEnroe and Roger Federer. John McEnroe had a very scarcity-orientated mindset. Whenever things didn't go his way, he broke his racket. Hey, he had a lot of rackets to break. He must have broken thousands. And Federer was so incredibly cool at all times. He had inner peace. They were both technically competing, but one was competing with himself, Federer, and one was competing with everybody else that he came into contact. Of course, Mcenroe. And thank you, Dan Bray. Dan said, promoting positive excellence is the strongest component of the KS method, in my opinion. Thank you, my friend. And the concept of competition. Competition in and of itself is not bad in any way. It depends if you have a scarcity mindset, that is a problem. Or if you have an abundance mindset, that is a benefit. I've seen a big change in YouTube's algorithm recently. It doesn't like long comments and typically just deletes them. Thank you, YouTube. But the concept is that if you write it in a word processor or something of that nature, you can just copy and paste if it doesn't take the long one, or just do a series of shorter ones. I think it's wanting that, a series of shorter comments. And sorry that YouTube deleted your comments. Naughty YouTube. We have such an incredible community, a global family of over 15,000 people who span the world. And if you have friends or family who could benefit from positive excellence and what we do here each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. And to Kali Chef Japan, congratulations on your new babies. Sending lots of love to you all. I personally think we're becoming more and more in sync with the market. We know the market has now the potential to go much lower, though that actually puts us in synchronization with the market. Now we just wait for those beautiful, beautiful bounces that will occur as the shorts cover their positions, and we're ready to pounce on that. We're actually not scared out by market percentages. We're not scared out of a red market. We love red markets. I'd just like to highlight one comment from John, and there's so many brilliant comments in this, but I think this is really worth talking about. We aren't taught about abundance and cooperation within society. The rewards in life and what leads to happiness are those things that are of help to other people. Being of service is where the joy is. It's really fascinating that this comment, just brilliant comment, it's absolutely about the epidemic of depression and anxiety that's washing over our entire globe. People are living in scarcity. They're focused on competing against others rather than bringing their best self into whatever they do, competing against themselves, you might say. So if you think about that, of course people are miserable because they think that in order for them to win, another must lose, and that would make anybody sad because that's just unsustainable. The people who lose don't like it. And thank you for your comment, Marco. Competition has to be within ourselves. For me, it's the only way to learn from life's experiences and make myself a better person. The main lesson, which I always keep in mind, is that I have limits to climb and I have to work hard to improve myself. Being part of this great community gives me the feeling that we are not alone, and that by acting together, we can make this bleeding world a better place. Wow, Marco, just beautiful. Something to bear in mind, John McEnroe, how superstar John McEnroe became the most hated tennis champion of all time. What you find over life, it's important to have inner and outer peace. John McEnroe breaks racket and gets booted from the Australian Open. On January the 21st, 1990, John McEnroe became the first player in history to be disqualified from the Australian Open. Oh, those Aussies are tough. After an outburst in which he broke his racket, yelled at a linesman, and erupted into a string of curses. Let's flip over to Roger Federer, the Swiss tennis player, winner of 20 single Grand Slams. Wow! Roger is one of the most loved tennis players. Inner peace or outer peace, or inner violence and outer violence, we're all free to choose, and you can see what the results are. When people first start trading and investing, they get caught up in retail emotions. The emotions are optimism, thrill, euphoria, anxiety, denial, panic, capitulation, hope, and then the roller coaster starts again. This is the last place you ever want to be. And I think people are moving from anxiety into to denial at the moment. Smart money is completely different. We actually look with a professional mindset. We put in the hard work and the dedication. We mark up our charts. We look at the statistics. We run the numbers. That doesn't mean we're mathematicians necessarily. What it means is that we actually don't have a story. We look at what the market is telling us and then we act on it. We don't have hope or optimism or any of these things. We have a system. And with so much uncertainty and the markets going red at the moment, a lot of people new to the investment and trading game, if you like, would be going through the panic zone and the blame zone. These, unfortunately, are rules that lose money. You want to try and get out of there as quickly as possible into Zone 3 and Zone 4. Zone 3 and Zone 4 are the patience and rule zone and mastering fear zone. You can only get to master fear by positive excellence, and you must master fear if you're going to be successful in trading and investing. And being consistently profitable does not actually mean that you've mastered fear and you feel worthiness and meaning. Getting to that worthiness and meaning will basically make every day sunnier. It will bring out all the joy in life, and it will get rid of a lot of anxiety and also depression as well. Frequently, we're just thinking the wrong way, but we've never questioned our thinking. For example, we read news headlines and say, oh, the news headlines, they're telling us the absolute truth. Or are they sensationalistic? Or are they trying to sell advertising space? You get the idea. You need to put in the hard work yourself. And learning to buy on red and sell on green takes a lot of knowledge. You need to go through the masterclass, work your way slowly, going slow to go fast, through the foundations, the trend, the timing, the real wealth positive excellence, and the trigger section. And then you will find that you look at the market in a completely different way. It will literally save you decades. I wish I could have done something like the masterclass 30 years ago. It would have been the best thing I could have ever possibly done. So I'm paying it forward. I'm giving that to you now. Hopefully, when you look at the markets being red like this, you will not see panic. You will say, I'm not doing that retail stuff. I'm not on that roller coaster. I'm smart money now. Just tell yourself you're smart money now, and you will get into that smart money thinking. In this world, there's nothing but abundance, but we have to get that mindset to see it. And please look at this market like it's a gift. All of this red is just putting you on the right side of the percentage. That's rule 359, but you're not on the right side of the percentage just yet. Probably we're going to get a lot more negative price action. Just tune in each and every day, and I'll guide you through this mess of a market. Ultimately, of course, you must make your own decisions, and you're the only person that can buy or sell. You have that control, but you need to do it with emotional mastery first and foremost, with an abundance mindset, not a competitive one. The market is not against you. It doesn't want to see you fail. It wants to see you learn. I had a very interesting comment. Is the concept of one person losing money and somebody else gaining money, isn't that some kind of bad thing that happens in the markets? No, not at all. The markets are all about learning. The market doesn't know us, and we don't know each other in the market as well. And it takes an enormous amount of money to push the market in one direction or another, and we simply don't have that amount of money individually. But if you look at it from this perspective, when you make money from the market is saying, well done, you passed the exam. And when you lose money in the market is saying, oops, you can do this one better, try again. I would suggest you depersonalize it. The market doesn't know you, and you know that for an absolute fact. If the market doesn't know you, the market only knows if you have knowledge or not, and only knowledge will take you into profitability. Please let me know in the comments, what do you think about the potential for sustained negative price action, and how are you going to combat that? What strategies are you going to do? What are you going to use? And also, how are you going to master the emotional uncertainty that comes around these really red prices? And how long do you think until we get some green back in the market? Okay, love it. Looking forward to your answers. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.